Hi guys, I'm coming in for today's video, although I know it's quite late. I do apologize for the delay today. It's been a kind of a crazy weekend for me. Um, for today's video, I know I mentioned earlier in the week that I was possibly thinking of doing one on the impeachment trial of Andrew Johnson, but ultimately I came to the conclusion that A, I just wasn't gonna really hit this topic at the moment, and B, due to how recent politics have played out, it could get a little political, and I didn't want to offend anybody's opinion or views on that topic. Now, today's topic was suggested to me by one of our subscribers. I will not list them by name, but it is today's topic, as I mentioned in the discussion vehicle of the channel, will be on the 1929 stock market crash that kind of precipitated the Great Depression of the 1930s. Now, the stock market crash is not something it's told in schools, but it's never really gone in depth, and I do apologize on this topic because of the factor of I am personally not a financial or stock market expert. Thus, I may not be able to provide clarity on every field that there is, but I will try to do my best that I can. Now, I've had to gather information on this partly because some of this I don't use. Some of the stock market crash I don't understand myself due to the fact I do not understand all the aspects of it. So for a large portion of this, I will be kind of looking once again at my little handy dandy note chart book, whatever you want to call it here. I don't know if you can see anything. So if I am looking off the screen, I am again looking at those notes in order to give you any information that I have found on this topic in order to maybe hopefully better just give you a general view. Again, this is a general view of what happened. This will not go into statistic detail because also I am not exactly one for math and numerical numbers all the time because it gets complicated with many people, including myself. So I will just simply try to give a general overview of what happened. Now, the stock market crash in 1929 basically was in October of that year, but beforehand, the stock market had actually done pretty well during that decade. The 20s, or the Roaring Twenties, as they were known here in the United States, was a time of economic prosperity for the United States and the world after immediately following the end of World War I in 1918. And basically, a lot of people with this newfound wealth that they had started to pour money into the stock market very early on, starting in about 1920, 1921. They started pouring a lot of money into the New York Stock Exchange, to be exact. And there were other stock exchanges as well that were having this similar prospect. Basically, I'm gonna if I do look off my screen, I do apologize. I'm looking at my notes for a refresher because some of this is not exactly in my head. But basically, a lot of people were putting money in the stocks due to kind of a multitude of reasons, and they were putting about everything they had in there. There was actually a lot more stock investors than there are today. There was a lot more back then. It was a really viable market to really get involved with. And back then, immediately following World War I, a lot of people were selling their wartime bonds, or Liberty bonds as they've been called, or they were even mortgaging their homes and putting this money directly into the stock market and investing it. Well, basically this continued throughout the 1920s, and it really continued without almost any problem for a long time, but there was rampant speculation in the stock market, constantly. Rampant speculation was happening every day, every month, every week, every year, and it kind of wasn't ending, and this kind of would ultimately lead to a very serious problem, which of course would lead to the disaster that was to come. And basically, the stock market continued to this point, but it hit its peak in August of 1929. And in August of 1929, now I'm going to have to look at my notes here a little bit as we get more in detail, so do apologize beforehand that this is happening. But in August of 1929, my due pardon, in August of 1929, 300 million shares of stock were being carried on the margin at that time, and it was pushing the Dow to a peak of about 381 points at that time, which was like a record for the stock market. Remind that the stock market was not actually founded in the New York Stock Exchange, at least, was not founded until 1817. So, for its existence at that time, there had never been a point that it had been so high. It looked good. Nothing looked bad on the stock market at all by that time. However, there was a bad part, and that was, although the prices were at the highest they'd ever been by August of 1929, unfortunately, when the market was hitting its peak, a lot of these stocks weren't exactly worth what they said. What it said on the stock market, it wasn't exactly what they were truly worth because of a multitude of reasons that was kind of becoming into line, mostly due to a couple of reasons that were happening. And there were a couple of things that were kind of leading to the devaluing of the stock, or shares, as I guess some people call them. And basically, some of these things were including, during the 1920s, there had been a very steady decline in production. After about 1926, the production in the U.S. had actually started to slightly fall, and there was a rise in unemployment that was occurring, steadily increasing every day, but not on a rapid pace. And the Federal Reserve had not done anything with credit. And a lot of people during the 1920s, credit cards were another big thing during the 1920s. They were kind of the brand new thing that people were using, buying things on credit. Well, the problem came, they couldn't quite pay all this back at the same time, and there was so much credit being lent out to people that had credit cards that was starting to have an impact on the banks and financial holdings where they were getting it. And this kind of was having a bad effect. And it wasn't until just about July of 1929 that the Federal Reserve actually raised and tightened the credit rates, which was kind of needed way beforehand in order to stop this. And again, the rampant speculation kind of was also a significant factor into this. Now, and if I look again here, I think I have a couple other factors that I might have wrote. I'm just going to be sure here. No, I do not see any. I do apologize for the quick brief view, just to brief you. Well, anyway, after August of 1929, that's the last really good point the stock market had, because immediately following, starting in September, the stock market prices, or the shares, started to devalue or depreciate, I guess is how you would say it. And this was a steady decline. It wasn't rampant yet. It wasn't a major fall. It wasn't like it was going from, let me give it wasn't going from 900 to 600 in a week. That wasn't what was happening. It was a steady decline, but they were slowly starting to go down. They were not gaining any value. They were actually losing value. And this continued into October, into about mid-October. And unfortunately, there were actually other things that were started to become a factor into this decline, and that was the factor that there was low wages being paid basically by companies for their workers. There was very low wages that were being paid. There was a proliferation of debt problem that was going on in the United States at that time. The agricultural sector had been struggling for some time, as many farmers started to have to compete with European markets for their goods, and it really wasn't good. And on top of that, there was a surplus of large bank loans that banks had lent out to people that they couldn't pay for them. But due to the terms, the banks they also couldn't liquidate them either. They were still there. So the banks had all this money lent out still. And this was hurting the banks and financial institutions, and this was not good for the economy. And people blindly kept speculating in the stock market regardless of this, knowing that it was having an impact. Well, unfortunately, this gradual fall continued until October 18th of 1929. And on October 18th, it became kind of it wasn't a drop down fallout, but the speed kind of started to pick up in the depreciation of the value of these shares or stocks. And unfortunately, when this began on this rapid fall, I do apologize again, just one more time, for looking to my notebook, but a lot of this I'm having to go off here because I do not have a lot of this in my head, so I do apologize. I'm not going to say that again. Anyway, well, basically, as the prices began to plummet, starting on October 18th, a rapid fall began, and as the prices began to plummet, a lot of these investors started to sell their shares. They were panicking. They started to panic that something was going to happen. They started selling a bunch of the shares that they owned at fairly cheap prices. They were panicked and terrified they were going to lose their money. And unfortunately, this led to, on October 24th, which became known as Black Thursday, over 12,894,650 shares were traded on that day alone. And this was a record for the stock market, and it also kind of indicated that there was a major crisis going to envelope here if something was not done, because there shouldn't be that many panicking and selling their shares in one day. Now, in response to this, on the following day, on that Friday of October 25th, a lot of the prominent leading bankers and investment companies throughout the United States began to they bought huge amounts of stock shares. Well, shares of stock. I'm going to say that now. Shares of stock. And they were buying huge amounts of this stuff just to try to stabilize the stock market, to try to stop this rapid fall or depreciation in value of the shares. And this actually kind of worked for 3 days. This actually worked. The fall actually kind of stagnated. It kind of stopped. It seemed like, well, maybe this did it. Well, 3 days later, on Monday, hell broke loose. And basically on Monday, this finally failed, and the market then began a free fall. It was no longer just rapid, it was just falling by the minute. And people where they had panicked shortly after Black Thursday on October 24th, now they were really panicking because everything was just going downhill. Every share was just losing its value by almost by the minute. And this was panicking investors worth a ton, and they ultimately started selling like flapjacks, I guess, would be a synonym or way of saying it. They were selling it like hotcakes. And it just got to so bad that, unfortunately, when this free fall was occurring, it hadn't hit rock bottom yet. The stocks were just falling. They weren't just outright falling apart and collapsing. Well, here came the big bad day known as a Black Tuesday, October 29th, 1929. And on Black Tuesday, on that day, stock prices didn't just free fall, they entirely collapsed. They fell almost to the brink of zero in many cases. And on that day alone, the new record was kind of set. Investors having a panic on that day for how the market was free falling, a record of 16,410,030 shares were sold on that day alone. And that was basically the stock market crashed on that day. As the stocks hit and collapsed to almost bare bottom, the entire stock market had crashed, and they actually cut off trading at the closing mark when they should have actually closed it off during the middle of the day, seeing that everything was going to basically blank. I will say blank, meaning the hell word, but we will not say that in the sentence with the word. But this was so bad. There were billions of dollars lost in the market alone on just this one day alone, and thousands of investors were wiped out. And when I say wiped out, I don't mean they just lost all their little small shares that they had. I mean they lost their entire life savings. They had bet almost everything they had interconnected with these shares, and they lost almost their entire bank accounts. They were broke. It was basically chaos inside the stock exchange. And as soon as people started going broke, they started pouring onto Wall Street outside, and they were just basically throwing themselves on the ground, wondering what the heck had happened. And unfortunately for some of these individuals, it was so much of a strain on them that they actually just days later or the day of went to home and committed suicide. It was kind of very sad for those individuals. But anyway, what had also happened, as there were so many shares being traded, that the stock tickers, they basically they ran until after close, because of the factor that they couldn't even handle the enormous amount of trading that was happening on that day alone. It was so much that the stock ticking machinery couldn't actually keep up. And that had never happened in the history of the market at the time. And basically, since the stocks, now on the next day, since the stocks had kind of hit bare bottom, they could not go down. There was nowhere to go down. They were at the bare bottom that they could be. The only way they could go anymore was up. They could only go up now. There was no bottom. They'd hit rock bottom. There was no way they were going to go lower. And on the next day, on October 30th, they actually did rebound a little bit. They did rebound substantially a little bit. However, during the next few weeks, the stocks never really gained their previous values at all. And in fact, by 1932, for example, a stock was worth any stock was worth only 20% of what its value had been in the summer of 1929. They were still incredibly low. And just to really give you maybe an idea of how rapidly stock values or share values fell on that day for different companies, I have actually found some on here that I wrote down I found from a source. And also to basically add on before we go into this part, on Black Tuesday at close, the Dow had closed at 198 points. And remind you that back in August, let me look back here, back in August, this Dow had been at a peak of 381. We've gone from 381 on the Dow to 183. And over time, now if this was over a year, maybe not. I mean, it still might be a cause for concern, but all that. But remember, this happened in less than 3 months. This was devastating. I don't know how else I can really drive that home. In fact, basically, if you were counting out, it's dropped 183 points in a period of less than actually, if I'm thinking about it here, it's actually less than 2 months. It's dropped more than 183 points. And the Dow, it really failed to ever gain enough momentum to even pass the 200-point level for at least 20 years. It wasn't until 1949 or 1950 that the Dow finally once again passed the 200-point mark. It was that crippled. Even during the World War II economic boom that was happening because of World War II, it never really recovered until after the war. And that was kind of the bad part. Now, as for the companies that I have here, I had just a variety of the big ones at the time, and I'm going to basically, I will list the company's name. The first number I will give is from what the stock or share value was worth basically in August at the peak of the stock market, what the share value was worth, and what it was worth at the end of the day on Black Tuesday of October 29th. The first company we have here is United States Steel. United States Steel in August of 1929, and one share of stock in the United States Steel was worth approximately $261. By the close on October 29th, the share of that same stock worth $166. Remind you, this is less than 2 months. The Radio Corporation of America, or the RCA, in August of 1929, it had one share of the stock in this company was worth $505. At the closing bell on October 29, 1929, this same stock, which I remind you, less than 2 months ago, it was $505, is now worth $26. General Electric Company, which still exists today. To my knowledge, I think actually most of these do exist today. But anyway, $396 was the price of one share of stock in this company in August of 1929 at the peak. And at the closing bell on October 29th, worth $210. And here's another real bad one. And the last one I have here is DuPont. In August of 1929, DuPont, one share of stock in DuPont's company was worth $217. At the closing bell on October 29th of 1929, one share of stock was worth $80. You went from $217 in August to $80 in less than 2 months. Not good. Not good, people. be aware, I do not get on the stock market myself, but I do kind of sometimes I will happen to browse to see what the figures are for that day. But I am not an open financial investor, and I do not heavily pay attention to this stuff. Now, I do have at least a good friend of mine that is actually quite involved in this, but that's something that I really don't get involved into. Now, he'll tell me things, but at times I can only half understand it, and I think he knows it. So that's a whole nother matter. So if I'm not exactly saying some of this right, I do apologize in the meantime, but I'm not exactly a financial expert with the stock market at all. I've never dealt with it. I'm simply trying to get information that I have found. But anyway, basically, now the crash, many people in schools, if we go to school today, a lot of schools and colleges kind of blame the crash for the start of the Great Depression. But in reality, it really didn't start the Depression. There were other factors that really started it, but it really did accelerate. What the crash did was it did accelerate how quickly it came. It was like the final death knell of how quick we're going to have it start. And basically, it started within 6 months, really, of the stock market crash. And basically, by 1933, just roughly a little over 3 years after the stock market had crashed, half of America's banks had failed. People immediately after, as many people began to lose their money, they were withdrawing all their money out of the banks. Every bit of saving, every last penny they had saved up in the bank, they were withdrawing, and the banks had nothing, no people having any money in them, and thus they had to close. They had no way of operating, and half America's banks were closed, and 15 million people in the country, which is 30% of the United States labor force, was unemployed. And this was the true start to the Depression. And the Depression, although President Franklin Roosevelt was elected in 1933, put his New Deal in, and this did kind of alleviate some of the symptoms, it did not completely heal it. And to be honest, the Great Depression did not end until 1939 or 1940 when we entered, well, 1941, I should say, when we entered World War II. And the economy really bounced back. But even the stock market took at least 20 years to fully recover from this crash in 1929. So anyway, basically that's what I have for the stock market crash in 1929. I do apologize if there's more that I do not have. I do apologize in the meantime. I will try to get some sources on it that maybe can go more in depth than what I can possibly do as soon as I can. So I will definitely try to provide them when possible. Basically, this event is significant because it did accelerate the Great Depression. It typically is marked as the beginning, but it did not exactly strictly cause it. And even given today, the longest bull market in stock market history just came to an end, partly due to the rampant coronavirus pandemic that is going across the world and our country right now. And again, I want to say, well, not again, but I've not said this before, but I do wish the best of luck and safety to everyone out there who is facing the risk of this disease, myself included, because it's not something we want to get. I understand that, and we're probably all scared to death, but to be truthful, it's probably a little less significant than they're hyping it up to be, so just stay calm and it'll be fine. But basically, that's all I have on this video for that topic. Next week I will try to put in 2 more videos as usual. As for right now, I do not know the topic of the second video that I will do, but I have had a recommendation to possibly do one on since we're currently in the middle of a pandemic, to possibly do one on a pandemic from the past, just to kind of contrast maybe how it's much more deadly or much worse than the one we're having now. But I'm thinking of possibly doing one on the Spanish flu of 1918, but I am not certain yet, so that is the topic that's in debate, and the other one I do not know yet. So once again, if you have any comments, any suggestions, feel free in any form to tell me, because I love putting topics on my own, but I also love to include the audience when possible. So it comes in real handy when I can do that, and I hope to serve you better by hopefully getting some suggestions of topics that you're actually interested in and you want to hear about, instead of just stuff that I pick for the day. because I may not cover something that you exactly want to hear. So, in that regard, be sure to let me know in the comments or in the discussion page on my channel about any topics that you may wish to have me do over. Definitely be sure to let me know that. If you like this video or like the channel, just be sure to subscribe to it. There will be many more videos to come out. Considering I don't get sick with the coronavirus myself, I will continue this by every week as much as I can. And basically, that is it for this video. So definitely be sure to comment, like, subscribe, whatever basically there is to do, and let me know any recommendations you may have. So this is me. So I'm going to sign out for this tonight, and basically keep safe, stay away from the coronavirus, and have a good night.